the way to this part of the town and joining us for the press opening launch of EPACK IPO. My colleague has already introduced the gentleman on the dais who has been behind the success of this a very unique company that we are bringing to the public markets as we speak. We at Axis Capital and along with my other colleagues from BRL, from DAM Capital as well as from ICICI Securities are very, very pleased and honored to be part of this IPO. EPACK is very unique in terms of what business that they are into, and they are the second largest room air conditioner original design manufacturer in terms of the number of units manufactured in the last financial year, with a market share of more than 24% as we speak. And so that's a uniqueness and the size and scale that we are talking about. And it's not only the size and scale, it's also the backward integration that I think the management will run you through as we speak about the business profile. And it's not only the business, the experience of cumulative experience of more than 100 odd years that management has brought into table, which makes it not only a sustainable venture over a period of time and a very, very unique part of the business that they do. And it's backed by the marquee private equity investors, namely ICICI Ventures and Afirma Capital. And it has the dominance as one of the key manufacturers of fastest growing room air conditioner market in India, as well as the small domestic appliances. Without taking too much time, I will just let you go through the issue profile. Total issue size is 640 odd crores, out of which 400 odd crores is the primary issue, and the balance 240 odd crores is the secondary. The issue is scheduled to open on 19th of January, with anchor opening on 18th and closing on 23rd. And the issue price is ranging from 218 rupees to 230 rupees per equity share, with a bid lot of 65 shares for the retail individuals. I will request now Mr. Ajay Singhania to run us through the presentation. Thank you.
I'm thrilled here to be present today in front of you for the first launching of the IPO, which opens on 19th. I will take you through the company presentation. Before the company, like Amit, you already mentioned, EPACK Durable has a market share of 24% in RAC ODM, with highest amount of backward integration, all in a single roof and all done by way of organic growth. We manufacture not only room air conditioners, but we also do the small domestic appliances such as induction cooktops, water dispensers, and mixer grinders, etc. And by way of our backward integration, we aim to have delivered and have achieved a cost efficiency and cost efficiency in the market. Currently, we have 3 operational facilities, manufacturing facilities. The oldest one which we started in the year 2003 in Dehradun, and then the second facility in North we started in Bhiwadi, and now a third operational facility as we speak has been recently started in Sri City near Chennai. So 3 operational facilities, and each facility we have an R&D center. So the key strength of EPACK Durable lies in its R&D, because as an ODM we build, design, build, manufacture all the components, and then the final good. So in terms of backward integration, if I talk to you, literally except the compressor, almost all the components which go into the air conditioners are manufactured in-house. So that's the amount of backward integration we have. In value terms, let's say it's almost close to 65-70% of valuation done under the same roof where the final good is manufactured. So last 3 years, if we talk about, we have achieved a CAGR growth of almost 4.5%. And undoubtedly, like we claim that we are the second largest air conditioner manufacturer in ODM space. So our journey, as I say, started, so we have almost 2 decades of manufacturing experience in this category of appliances, especially in air conditioners. So our journey started in 2003, and our ODM journey started in 2012. And last 10 years, we have gained almost top 7 of the top 10 clients in the country, both multinational and domestic market customers. 3 manufacturing locations, and the range of products, both the room air conditioners, so the entire range of room air conditioners as well as the small domestic appliances. And then the entire set of backward integration, as you can see. So almost all components except compressors are manufactured in-house for us. So client list, you can just see it's all market wide, both in RAC as well as in the small domestic appliances segment. The top 5 in the domestic small domestic appliances, and the top 7 in the RAC category. And then some of the future products which the company is actively developing are both for the larger appliances like coolers, washing machines, etc., and then the small domestic appliances also, personal grooming. So we have tried to balance our seasonality and the asset utilization by way of strategically utilizing our assets during the non-AC season by utilizing the same set of assets for manufacturing the small domestic appliances. I'll just quickly run you through the industry overview, which is very important to understand, is that India at 8% penetration for AC is lowest globally with a global average of almost 42%. So at a global average of 42%, this is per household. So in India it means only 8% households have AC, or maybe if we're talking really in terms of household, it may be still lower because the households which have an AC are definitely having more than one AC. So it could be less than even 8%. So that actually shows us the quantum of growth which is possible for this category. I mean, even if you compare it with the other peer appliances like TV or the refrigerator or television, which are at much higher, 30-40%, and refrigerator 60%, televisions are 60%. So AC has a long way to go. And now, especially in terms of the economic growth which we see in the last 3-4 years, the rise in per capita income, now AC is no more a luxury. So definitely the quantum of growth is very high, and it's the tip of the iceberg. What we see the market today at almost 8.59 million last year, and the market, as per the FNS study, is destined to become almost double in next 5 years at a CAGR of 12% almost. The last 5 years, if we see itself, the CAGR was close to 9%, despite having 2 COVID years, 2020 2021, in which both the years the market was hit at the peak of the AC season, April, May, June, the peak summer months. We had the COVID. So despite that, we clocked a CAGR of 9%. So 12% is a very moderate kind of forecast, and the market is destined to double, which obviously means that for the outsourced market, if you look at it, it's almost 35% of ACs are outsourced by the brands. Out of almost approximately 60 odd brands in the country, there are 10 brands who have some sort of manufacturing in-house, but they also outsource. So close to 35% ACs are outsourced, 35% of ACs are outsourced today. And going forward, the same trend is supposed to be continued. So rather it will actually increase to almost 40% in the next 5 years. Similarly for the other appliances also, we see all of them are at a growth path of plus 5% CAGR year on year. So EPACK is also one of the participants in the government's highly acclaimed PLI policy, where we committed an investment of 300 crores in EPACK Durable. We are among the third highest in terms of investment committed in the AC PLI for manufacturing of components. And interestingly, this PLI is for manufacturing of components, not for the AC as a whole. So that gives us a leverage to utilize the component manufacturing facility which we have recently started, to utilize it for the non-AC also, which is in line with our strategy to develop the small domestic appliances. So the key businesses that we talk about is one, obviously the long-term, long-standing relationship with most of the market customers. The average relationship period is almost close to 7.5-8 years with most of the customers. Then the growth of the manufacturing capacity which we built up, and going forward, the fundraise which we are doing to further enhance our manufacturing capabilities and increase our valuation, domestic valuation in-house. So these are some of the key strategies going forward, which will help us increase our wallet share with the existing customers as well as acquire new customers. A few case studies, like I said, our average relationship with most of the customers is like 8.7 years for AC, and for small domestic appliances, the average relationship is almost close to 6.5 years. So that's the average length of relationship we have with these market clients. And it takes time to build relationship because these are all multinational national customers. So I can say that the entry barriers to the business are very high. So to summarize, all the 4 categories what we are into currently and going forward we are looking into, each one of them are in a high growth phase, and the company is forecasted to grow at a decent pace remaining in this core competence. Our current capacity for AC alone, if you look at it, is almost close to 3.7 million units, which is the second highest in the country. So our strength lies in capability in designing the complete product, developing, manufacturing, and innovating. So in terms of innovations, we will talk about, the company has been first in terms of bringing out some of the products in the market, like the first window air conditioners with R32, both in fixed bed as well as inverter category. We were the first one to introduced the 5-year copper guidance, which led to a substantial saving of 33% of copper by weight. So these are some of the files the company has been doing, and continuously we are investing in R&D with the purpose to retain our leadership in this direction. We have the complete set of labs at each of the manufacturing facility with the required certifications and NABL accreditation. The board is also well diversified with 4 promoted directors currently and 2 nominee directors on the private equity side. We have 6 independent directors, which bring a lot of diversified experience and expertise to the board. And then our the KMPs or our senior management team, what we have has been with us over a period of everybody is with us for almost the last 4 years and more. So this actually is the pillar of strength of the company. So once again, the highlights: expanding the existing portfolio both in RACs and small domestic appliances, continue our journey in operational excellence by virtue of increasing our backward integration and improving our capabilities by way of investing in the R&D, increase our wallet share, and further explore and strengthen the supply chain. That's pretty much about the company. Should we get into the numbers also? The company is actually a socially responsible company, so we have taken initiatives now to in both in terms of CSR and ESG. All plants are giving solar power and the rest of the initiatives. So financial Rajesh, can you just brief?
Thank you for time to join this. Rajesh sir has already explained about the business of the company. I am just presenting the financials of the company. You see the company, the revenue from operations has been recorded is CAGR of 45% over the past 2 years. Revenue for financial year 23 was 1,500 plus crore, and EBITDA margin has also gone up to 102 crore. It is 7% EBITDA margin, which is a 56% CAGR over the last 2 years. Profit after tax has also gone up drastically, more than 102% jump as the CAGR, which is around 32 crore for the financial year 23. Return on capital employed and return on equity has also improved, which is around 15% for the audited financial year 23. Together with this, the working capital cycle days has also been improved. In financial year 23, which was around 91 days, and in the last 6 months of September, audited numbers have shown that it is around 60 days. Debt to equity, because the net worth of the company is going up, because of its profits is going up. This net to equity ratio is around 0.8 for the 6 months ended September 23. As I explained about the profit, this is the profit and loss account of the company and the balance sheet, cash flow, which I already explained. This was my side.
Thanks a lot for patiently hearing for the presentation. The house is open for the Q&A and management is here to answer all the questions. Thank you.
From sptulsian.com. In H1 FY24, your PAT is dropped to less than 3 crores from 32 crores in 23. Can you explain the reasons for the same?
So the steel industry, if you see the half year for the previous also, we are almost flattish actually. Most of the come from the second half of the year of the calendar financial year actually. This is not like that the profit has come down. This is the as per the industry norms. If you see the last half year also, you will find the same number actually. We will see the number on the annual basis only.
Just to add what Rajesh just mentioned, in the typical industry wherein the 40% of the revenue comes from Q4 of the year, and almost 15 to 20% come from Q3. So Q3 and Q4 are the highest performance months, the financial year. So Q3 and Q4 are the highest performing months, wherein the entire set of top line as well as the bottom lines come. And in Q1 actually we get about 2 months to perform. So for a manufacturer actually it is December to May period wherein the entire manufacturing happens. So for Q1 we get 2 months, April to May, and then the balance 6 months are kind of subdued. significantly.
Right. I see there is capital work in progress of 144 crores as of 30th September. Is this all capitalized towards the Sri City project which was commissioned in December?
Yes, absolutely.
And what is the gross turnover of that?
So this has been capitalized only as we are talking now. So it was capitalized at the end of December last year.
So will that also operate on a capital turnover ratio of 3.5 times?
Hopefully much better. Hopefully better, but yeah.
And can you quantify how much capacity is increased after this?
Yeah, so while at the time of filing the DRHP, the capacity was close to 2.4 million. Now with CCT coming up, it has increased to 3.7 million. So that's an additional capacity of about 1.25 million.
And post the capex which will be funding from fresh issue proceeds, how much will the capacity be?
So 500 crores of capex to 30 odd crores coming from the fresh issue. The total capacity will be increased by 2.4 million.
Additional 2.4
Yeah,
million.
so 3.6 plus 3.4, let's say roughly 6 million.
But this additional 2.4 million will come on stream only in FY27, right? Because
Yes,
the next 2 years will be. And you're expecting a better turnover ratio, more than 3.5.
What I can tell you is that the company is focusing on utilizing its asset turnover by way of focusing on the small domestic appliances. So the whole idea is to utilize the fungibility of the assets.
But margins in small domestic appliance will be lower than RACs.
So we don't do a segmental margin analysis. So the results are declared on a basis.
By 24, there was some conversion of CCPS to equity, and that's why net worth increased by 150 crores, even though the profits didn't increase. So can you explain that?
The CCPS were converted actually with effect from 1st April. There were two CCPS. One we had given to ICICI Venture, 160 crore, which got converted in the financial year 2029 actually, and another 160 crore we had given to Afirma, which also got converted in the current financial year from 1st April actually. In the current financial year, effective 1st April 23.
So it's only these two conversions which led to increase in net worth.
Yes, and other than the profit, retained profit.
Yes, yes.
Profit
But
after
in
tax.
each one there was hardly any profits.
Mainly,
It was this.
it was around 3 crore. You are right. You are right.
Finally, the investor India Advantage Fund is selling lower than what was mentioned in the DRHP. Why the reduction in OFS?
Public they feel more confident about the business right now, and they want to continue their investments. See, anyways, they are a long-term investor. So it was one of an event happening right now, so they wanted to liquidate a part of it, and they want to liquidate one part of the equity currently.
It lends enough confidence to the whole issue for the fact that selling shareholders reducing his OFS, given that the growth is so strong, the franchisee that they've built, and at the same time they're seeing confidence in the company's outlook and what they can achieve. That's why the OFS is probably getting cut.
Why no confidence from the promoter? The promoter OFS remains the same.
Do we want a sizable issue or not?
No, there is fresh issue.
That's what I'm saying. So they're building it for the future.
No,
but at the
but
same
it's
time,
quite contradictory if you're saying that investor is confident and promoter is not confident.
both of them are confident, right?
Because the OFS portion of promoters is not reduced. That's the only point I'm making.
It's an equal
Equal
proportion.
proportion.
From Deccan Chronicle, who would be the 3 top clients?
We listed all the clients.
Okay.
And the top 3 definitely, one is Volta, being the market leader. Definitely one of them. So it's Volta, and give the others like Evans, Blue Star, Hire, and all of them following in. We have Bajaj, Philips, again.
You are the only supplier to them, or they have multiple suppliers?
So in air conditioners, the larger brand is definitely more than one supplier.
So how much you supply to Voltas percentage of their total?
It is not quantifiable from our side. What we know is our revenue with them, and the competitors' revenue and spread. We have not been able to get hold of those data anyways.
So the demand has been on the rise or
Definitely.
stable?
So one of the case studies we presented, we have shown that one of the market clients we have been growing at a CAGR of almost 20% year-on-year for the last 10 years.
Any path-breaking innovation in power consumption reduction in AC that you could share?
See, power consumption for AC is a regulated product. So here every 2 years the ACs are getting upgraded in terms of power consumption. Even if last 10 years if we see the journey AC industry has taken in the power has almost reduced by half. So that in itself is a very distinct step the industry as a whole has taken. I mean, it's India's power consumption requirement is one of the most stringent to be. Today the 5-star ACs that are sold in India market are probably the best in the world in terms of power consumption.
This will also fuel the demand because the consumption of energy is reduced. This will also fuel the demand. It's also potentially one of the reasons for fueling the demand for increasing the capacity.
Thank you. Thank you.
I think one of the most stringent, India is the stringent.
One of the most stringent.
In fact, the industry keeps on harping to the government that please stop. I think every 2 years the table changes, so the industry has to work very hard. But it's also good in a way that we are going to be more prepared for exports, which is going to be the next big thing for India. With this PLI scheme coming in, and then the whole philosophy of the government to create global champions in component manufacturing. The PLI scheme or incentive scheme is on component, not on pieces. So when the scale of these components increase and we become global champions in the global market, I think the present instability which we have to service China will get mitigated in next 2-3 years time, and then we feel that a whole big market opportunity will open up for India. Now also you see that India is about 8.5 million air conditions. We service China's 80 million domestic demand. So with the same size of population, or the same size of population, the demand is China is humongous. So I think we can foresee that pattern coming up in India also.
Are you also in exports?
Currently, we export from India negligible, especially. So yes, we do some amount of exports, but then that is negligible, less than maybe 1% of our overall revenue. Currently, we are exporting some like to Sri Lanka and some Middle East and some African countries. But then export is a much bigger market. I mean, like Chairman just said, global market is to 220 million. So if we except China, also if we look at it, it's almost only 40-50 million is the global market. And that's one opportunity which is definitely going to open for the industry within the next 2-3 years as our competitiveness vis-a-vis China improves. So the domestic market is just tip of the iceberg. Supplies and exporting everything.
And our CCT facility, which is near to Chennai, near to the port, I think will really help us in mitigating our logistics disabilities. Inbound logistics, outbound logistics will have the advantage. See, CCT is just about 150 kilometers from ports. Only 60.
Thank you, sir.